everyone, I'm Stephen Kalayjian, and welcome to Back to the Futures. I'm glad to be here and this Tuesday, and we're really excited about the futures markets here with Tradier Futures, and so excited to be here as their host for Back to the Futures every Tuesday and Thursday from 1:30 to 2. You know, a lot of people from all around the world are really excited about futures markets, especially where the S&Ps were trading today, yesterday, making new highs, 59, 18 and a half. And a lot of stocks are so out of whack as far as where they're being priced in at. And, you know, the one thing I will tell you, right, is that a lot of people are going to the futures markets because of the fact that they don't have to worry about the PDT rule, and they could trade micros, and they can paper trade. They can go to micros, and they can eventually go to the big S&P futures. So again, it's just a real unbelievable type of situation for people to learn futures. And a lot of people say to me all the time, they'll say, you know, I don't never traded futures before. Okay, so you know that doesn't mean that you can't learn. Okay, you have to learn how to get a good, you know, the platform from Tradier. You look at the ladder system, being able to put the bids and offers in, and learning how to scale into a position, and learn from someone like myself each and every day. I stream from 9 to 4 at Trade Easy. So anybody wants to give me a holler, 914-500-7484. But it's really important to really understand the importance how futures markets. I've had people who are trading stocks now learning futures, people who are trading options who are learning futures, and then there are some that just want to learn, period. Okay, who just want to learn how to trade futures. And for me, I think it's a really great time in my life that I want to be able to give back and help those who really want to learn how to trade futures. And when you're trading when you're trading the futures market, especially during the European sessions, as my research has shown me, and I teach everybody in my live stream each and every day from Monday to Friday from 9 to 4, you got to look at the underlying ETFs during the U.S. session. So the S&P futures with the spiders, the NASDAQ futures with the QQQs, the YMs with the diamonds, the RTYs with the IWMs, and the GLDs with the gold with the GLDs, and the 30-year bond futures with the TLTs, and oil with the USO. So really important features to really help those around. It's important to understand that the technology that I spent nearly 10 years of my life building is on TradingView. So anybody who wants to get this software, and I teach it throughout throughout the day, along with trade ideas and opportunities, excuse me, for people to really excel in the marketplace and to do extremely well. You know, consistency is important. Discipline, confidence. Confidence is obviously having the tools in front of you. Patience, waiting for the patterns to set up, and then passion, right? So again, it's really about really just trying to be just really trying to be in a situation to enhance your trading, to be able to recognize the skill set of trading, and to be able to trade what's in front of you. Learn these patterns from me. Learn my terminology, okay? And one of the things that I say to everybody that is really important is to recognize, to ask questions, to be able to understand the patterns, understand what's going on, and to be in a situation that you can really benefit from the style of trading, whether you're intraday trading, whether you're trading intermediate or long term. So I wrote a report, you know, basically, and I said, you know, I thought that the spiders were 12 points away from my 10-bar weighted moving average on the daily charts, right? And I said, I was not bullish at all coming in here, okay? So I said that I would be looking to short everything. I did not was not bullish at all in any way, shape, or form. But the one thing I wanted to say was that it's important that when you're trading the markets, okay, when you're trading the markets, to be in a situation that gives you the right tools. You have a mentor like myself each and every day. Traded nearly 2 billion shares of my life, being able to trade countless of futures contracts. But again, what's important is that you have a mentor like myself. I'm giving you the confidence to trade each and every day, to be able then to now take it with having the technology at your fingertips, and then being able to teach you the patterns, teach you the trading styles. Remember, if you make $500 a day, that's about $125,000 a year. It's a nice living, if you ask me, okay? But again, what's important is that you really feel confident, that you feel like you're in a situation that you can then get on a roll. And when you hit your goals every single day, as most of my people in my live stream achieve during the day, they stop. They stop, and what do? They then go and they watch, they learn, and they keep going at it to the point that it's just part of the regiment every single day. That they try to be in a situation that gives them the ability to trade the market, to be confident in their approach, and to be able to just hit singles and doubles every single day. Pete Rose just died within the last week and a half, and he was my favorite baseball player, along with Roberto Clemente. I'm 61 years old, so these are names from the past. But for me, these are names from the past. So for me, it's important that when you're trading the markets, you want to hit singles and doubles every single day, just singles and doubles every single day, and understanding the mechanics of the market, understanding the ability to learn, understanding the terminologies, the patterns, why it's important to use multiple time frames, why you need to have technology in your right before your eyes to be able to then enhance your trading each and every day. Does anybody have any questions at all? Anybody? Okay. Now, one of the things that's important, okay, is when people don't use stop orders, okay? And I tell people all the time, do you drive a car without a brake? And the answer is no, right? No one drives without using a brake, okay? And what's important is that when you're trading the markets, that you want to have risk control parameters, right? So I always say to somebody, like today we called some really great shorts on the S&P in 92, 93. We called some shorts earlier in the morning. Yesterday we called a monster short near the end of the day, and boom, within probably 4 minutes they dropped 9 to 10 points on the S&P. But it's important to understand that when you're trading the markets, you want to be able, as for example, there's a buy divergence just now. So the S&Ps just ran just now 3 to 4 handles. So if you bought S&Ps at 74.5, now they're trading 78. You have an option to sell here, or you're looking to maybe raise your stop to 76.5, right? And it's important to understand. That when you're trading, okay, that you want to be able to identify. So what we just saw just now here is that we're making new lows here on the spiders on the 15-minute time frame, but the MACDs, as you draw your horizontal line, did not confirm. So that's why the S&Ps just ran just now. It's really important to recognize these patterns. Everything I do is predicated on buy and sell divergences. Remember, I have 5 conditions in the market. You can have a trend, you can have a buy reversal, you can have a sell a trend, a buy reversal, a sell reversal, a correlation, and a disconnect. And when you have these type of patterns, okay, what you're going to see with these type of patterns, all right, what you're going to see with these type of patterns is you're going to remember that each of these patterns has 2 conditions have two strategies: a buy and a sell divergence. Okay, a buy and a sell divergence, and that's really where everything stems from. Okay, but what we're looking at when we look at the markets here is that when you see the divergences here, you can see how important, if you look at what the S&Ps just did. Let's say you just bought off that sell divergence, and I think the low here on the S&Ps, if I'm not mistaken, was I think it was 70, 72 and a half, if I'm not mistaken, 73. So they just ran 7 cents, 7 handles, right? So by them moving 7 handles, okay, by them moving 7 handles, now 8 handles just now, okay, that's 8 points. So if you did one contract, let's say you bought one contract at 74, you scaled in another contract at 72, and you never got filled. You just made, just say, 5 handles. That's 250 points on one big one, 25 on one micro. Okay, so again, it's all predicated, okay, on the ability to understand that you wait for the right patterns each and every day. And what you want to do, okay, is to recognize the importance of when you hit your goals, you stop, you watch, and you learn. Okay. 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 So what I'm saying here now is we wait for the right patterns. Gold was a beautiful pattern off the 15 and the 30-minute time frame. We caught a nice long in gold here. Gold ran about $4.50, $5 just now. And what's important is that when you look at the markets, you want to be able to recognize these patterns. These patterns repeat themselves each and every day. I teach these patterns throughout the day, and I wait patiently for these patterns to set up. Okay? It's important that we all understand that how you wait patiently. And when you're patient, I know it's a hard word in trading. Trust me, I know it's a hard word, but in the end, it's all going to pay off, because when you're trading the markets, patience is very important. Sometimes I'll wait all day and then here, look. So for example, today I got a big sell reversal on the spiders on the 15-minute time frame. I got a sell reversal on the 30-minute time frame. I knew immediately, okay, that the highs were in for the day once that 15-minute time frame reversed right there, okay? And what we really need to focus on, okay, all right, is having the opportunity, okay, to recognize, look at these S&Ps go. They just ran 9 handles here on the buy divergence. You were making new lows in a non-confirmation, okay? All right. So with that, what's important, okay, is to recognize that when you see these patterns like this, and then I caught this 15-minute time frame, I caught the first short here, I caught a nice short here, okay, and then now we caught the buy divergence, and the buy divergence should set up on the 15 and 30-minute time frame. The MACDs are negative above the pivot, and we're now looking to probably look for shorts on the 15-minute time frame. Let it get a little bit more overbought, and then I'll be looking for some shorts there. Okay. One of the things that's important is when you're trading the markets, okay, you want to be really focused on the asset that you want to trade, right? Is it, you feel comfortable at what you want to do. And if you're comfortable at what you want to do, okay, to give you that advantage, to give you that edge, you want to be able to then recognize, the potential. The potential as is, what is what is the market going to do to give me the best rewards? Is it trading the NASDAQ futures, the S&P futures, gold, the 30-year bond futures, or what? Okay. And it really doesn't make a difference as far as when you're trading. You want to be confident, you want to be comfortable in your trading style, right? And so you really want to okay, you really want to be able to recognize these trades and say to yourself, what's the best asset for me to trade, right? And so whether it's trading the 30-year, I love the 30-year bond futures. Oil's a little bit of, to me, not the greatest thing in the world, even though the patterns are phenomenal. I love the S&P futures. I love the 30-year bonds. I'm not really a NASDAQ guy, even though I love the NASDAQ futures, but I like you don't have to trade all the indexes. One is enough in my book, right? If you bought S&Ps here, let's say you bought 73, 73 and a half, 74s, you're up 6, 7 handles. Remember, if you can make anywhere from 6 to 15 handles a day on the S&P, and if you did micros, let's say you did 10 handles a day, that's $50, right? Gross, less commissions, but that's on one micro. You do 5 micros, or you do the math, right? You do 10 micros, 20 micros, okay, you do the math, right? So for me, it really stems from understanding, how to trade the market and what's the best way to trade it, whether you're trading the big ones or you're trading the micros, okay? So again, beautiful buy divergence there. S&Ps making new lows. The MACDs did non-confirm here on this 15-minute, on the 5-minute time frame. You can see the buy divergence right here. If you draw a horizontal line, we made new lows, and the 5-minute MACD did not confirm. Okay, it's imperative to know about being disciplined. A lot of people, when they put their stop orders in, you really, as you're moving up, you could put your stop orders in. I want to teach you something. A lot of people have gotten hurt in this regarding the stop orders, putting in stop orders that are stop limit orders. So in a fast market, if you're offering something at, let's say S&P is at 80 and it drops to 79, your offer on a stop limit becomes an offer versus a sell stop market order. Okay, so there's a big difference, and please learn that. It's really important to learn that. Okay, it's really important. Okay, all right. So like I said, what you really need to do and to focus on is understanding the futures markets. Again, I teach this throughout the day from 9 to 4, calling great patterns, great trade ideas. Again, I don't give recommendations. I guide, I teach, I educate, I explain, and and it's, for me, there's no greater joy in my life. All right. If anybody has any questions, are there any questions here at all? Okay. And again, the futures markets, I think, are going to go like this as far as the amount of people that want to start trading futures. To me, I think that a lot of people now have come and really starting to learn. They're not fearful of the word futures anymore, okay? And I tell people all the time, like, guys, come on, if you're trading an option, if you're trading a stock and futures markets, well, there's, even, a quarter, a half, 3/4, and even 5 price points. You just go click, 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 and you got to identify the patterns. You got to identify the move. But for me, I think the most important thing is, when you're trading the markets, you want to be able to have a mentor like myself, technology to help you. You want to learn about the scaling in process and the scaling out process. You scale into a position, just like on that gold trade. Gold just ran from 76.30 to 80, almost 81 just now on that gold long. Okay, so it's really important that when people are really understanding the way I teach each and every day, to be able to learn to scale in, to scale out of a position. Yes, there's a terminology difference, and I understand that, but people get it over time because I sound I say the same things over and over again. But I'm looking at the bigger markets now, and I see the MACDs on the 60-minute time frame. Let me go to the spiders on the 30 and 60-minute time frame. You can see they're negative here. So any rally is going to run into a brick wall. So today I said when I walked in that the index futures on both the 15 and on the 30 and 60-minute time frame, the MACDs were negative, right? The MACDs were negative above my pivot line. And so when we were making new highs, there was non-confirmation when they were trading 59.13. And I said, let them have them. And the spiders, and look at the 15-minute time frame on the spiders. Look at the sell divergence. You tell me right here you're making new highs and these MACDs are non-confirm. That's a Picasso. That's an absolute Picasso. There's no way to be buying that right there based upon the rules that I have and the teachings and the technicals that I just showed you. Okay. Does anybody have any questions at all? Anybody? Okay. No questions. Okay. All right. Okay. What we need to focus on now is obviously the markets are going to be very quiet, right? Last election, I remember in 2020, Trump and Biden, the markets were going completely crazy. They were going completely bonkers. One day Trump would say something, then another thing would come out. So it was all predicated on a lot of noise. I don't think this year is going to have that. And we got the Jewish holidays coming up this week. So I think the markets are going to be very quiet. Columbus Day yesterday, very, very quiet, right? And, you know, the thing is, what we need to focus on is understanding where we are, right? As far as where the markets are. So we hit that low of August 5th at 51.20, 51.20 or 51.20 on the S&Ps. We then rallied about 400, 500 points. We dropped down to 54.12.5 on the S&P futures, and we pushed all the way back up to 59.18.5. So I don't think that 51.20 is going to be broken this year. And, you know, I have a superstition that I have, right? So in my career of almost 42 years, I saw a lot of bad ticks. A bad tick is when you see a price and then you try to have the exchange fix it, like, you know, next couple of days or whatever. They don't, but I created a product that would fix what's called a bad tick, right? So about 2.5, 3 weeks ago, I saw a bad tick on the S&P futures, 65.82. I said, oh my goodness gracious. The S&Ps are going to 65.82. Not once in the history of me in this game have I ever seen a bad tick never get to that price point. So whatever that means, hopefully, maybe that's the ultimate target where the S&Ps are headed. 65, I think it was 65.42 or 65.82. Now, I'm not saying to run out and buy the market because of that. I'm just saying in my career, I've seen a lot of bad ticks. I created technology to fix the bad tick without relying on the technology companies or the member firms to fix it. However, what I did was I was able to recognize the ability to fix it, and then I saw the bad ticks always go to that number eventually. Sometimes I saw a spider tick like that. I'm like, where the hell did that come from, right? And the spider tick eventually on that top tick, I would write it down. I'm like, okay, I think they're going to go there soon. Not soon, but eventually. And guess what? They went there one day, right? On the S&Ps just now, we had a little short here on the double red. That means the 5-minute time frame correlated with the 15. This push up here on the S&Ps just got up to the 81 handle just now. If you look here on the S&Ps, they just pushed up to, what was it, 82.5. They just dropped 5. Would have been a nice short there on the S&Ps. So again, if you try to capture 6 to 20, 6 to 15, 6 to 20 handles a day, there was 5 there, there's 4 here, and it's, there's 10, even if you caught 4 and 4. Now they just dropped 6 off the highs on this double red short. Beautiful pattern on the SDSs to give me that long or to confirm the short. If you type here, you can see, let me type this in if I show you the SDSs up. Maybe Billy can help me with this one. I don't know what I just did wrong just now here. Put the spiders up. But if you look at the oh my God, I just got killed. Look at this. S&Ps just dropped here, 7 cents. So if you look here, thank you. You look here, the 5-minute time frame correlated with the 15. This pullback, even though I don't trade the SDSs, just gave me that ability to look for the short. S&Ps just dropped 8. 8 up, 8 down, right? Actually, I'm sorry, got up to 80, so 9 up and then 8 down, right? So again, very, very important to trade the market, being able to see these patterns. And when you're trading the markets, right, you want to be able to recognize these patterns. And when you look at the underlying ETFs, these underlying ETFs, by using them and looking at the spiders, you can see the 15 and the 5-minute time frame. You can see, where is this? Yeah, I'll change this to the spiders really quick. You can see the 5-minute time frame negative correlating with the 15. So this short here at 82.5, this was a nice little short pattern on the S&P futures. And again, really powerful, very powerful as far as understanding the trend and understanding the market and taking that position, taking that pattern, waiting patiently. Caught the buy divergence. Okay, I was talking, didn't really call out the short there at above 81.5, 82. But again, whether it's the Qs dropping, the NASDAQ futures just dropped about 25, 30 on that pattern. S&P's now up 9 and down 9. So if you trade the right patterns, you can move the needle each and every day. And that's what we teach here each and every day during my live stream. If anybody has any questions, you can text me or call me at 914-500-7484. We have 2 minutes to go here. Does anybody have any questions at all? You can follow me on Twitter. I post a lot of times a lot of things about the markets. I'm here to help, and I just want everybody to be consistent, and I want to be able to make an impact. Remember, my legacy depends on your success, right? My legacy depends on your success. Whether you're a gold trader, a bond trader, an index futures, an oil trader, it doesn't make a difference. These patterns repeat themselves, and I'm really honored to be here every Tuesday and Thursday from 1:30 to 2. And I will see you here this Thursday at 1:30. So if anybody has any questions, please text me or call me. And again, great trading days ahead. Okay, the election's in 3 weeks, and we'll see what's going on with our country. But more importantly, be consistent, hit your goals every single day, and know when to stop, and then go back to paper trading and learn the patterns. I'm here to help you, and anybody willing to learn, I'm here to teach you. Okay, have a great day, everybody. I'll see you Thursday from 1:30. Thank you for being here.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.